The healthcare industry is, it's a whirlwind right now.
Yeah.
And today we're zeroing in on Cigna Group, their Q3 2024 earnings.
Right.
Want to see how they're handling all this turbulence?
Yeah.
You shared their earnings call transcript and some key stock info with us. So let's cut through all the noise and get to what really matters for you.
Right. And there's a lot to unpack here.
Yeah.
Cigna just dropped $5.7 billion on stock buybacks this year.
Wow.
And that's just the tip of the iceberg.
Right.
We'll need to figure out what kind of message they're sending to the market with that move.
Absolutely. And what about those rising medical costs?
Yeah.
Especially for specialty drugs. Are they keeping pace?
Yeah.
Plus, there's that whole biosimilars wave.
Right.
Is Cigna riding it effectively?
Excellent points. We'll dive into how those biosimilars are affecting Cigna's bottom line.
Okay.
And what it means for the future of healthcare costs in general. By the end of this deep dive, you'll have a clear picture of Cigna's game plan and whether it's actually working.
Okay, let's start with the numbers then.
Okay.
Cigna pulled in $63.7 billion in revenue and an adjusted EPS of 7.51. On the surface, that seems pretty solid in this economic climate.
Yes, but you always have to look beyond the headlines.
Right.
Remember, they're dealing with a lot of industry-wide disruption right now.
Sure.
David Cordani, Cigna's CEO, even called out the Medicare Advantage market as particularly challenged.
He pointed to things like escalating medical costs,
Yeah.
shifting star ratings, and changes to how risk-adjusted revenue works.
Here's what's interesting, though.
Okay.
Despite those challenges, Cigna is going ahead with selling its Medicare Advantage business to HCSC in early 2025.
And they've already said they plan to use most of that cash
Yeah.
for more stock buybacks,
Right.
which on top of the $5.7 billion they already spent this year.
Yeah.
Well, let's just say they're putting a lot of eggs in that basket.
It raises questions about their long-term strategy, right?
Yeah.
Are they laser focused on what they're good at, or are there just not enough other opportunities out there that excite them?
Let's look at those strengths then.
Okay.
Their pharmacy and specialty services division, Evernorth, really carried them this quarter. They saw significant growth, especially in specialty drugs and biosimilars.
This is crucial. Specialty drugs are a bit of a paradox for Cigna.
Really?
They fuel growth for Evernorth because of high demand, but then they also create higher costs for Cigna Healthcare,
Okay.
their insurance side.
Definitely a tightrope walk.
And it's a trend impacting the whole healthcare industry, not just Cigna.
Right.
Exactly. So the question becomes, how long can they rely on this specialty drug wave, and can they control the cost pressure that comes with it?
Right.
Their answer seems to be biosimilars,
Okay.
and lots of them.
They are pushing biosimilars hard, especially for Humira.
Yeah.
They reported that a third of eligible Accredo patients switched to a biosimilar this quarter. Plus, they're launching a $0 out-of-pocket option
Wow.
for a Stelara biosimilar in 2025.
That's huge.
Cigna is clearly betting big on biosimilars to make specialty drugs more affordable,
Yeah.
not only for themselves, but for everyone.
Right.
They're positioning themselves as leaders in this space.
Yeah, absolutely.
Okay, so we've got the good.
Yeah.
But now let's address the elephant in the room that Village MD write-off.
Oof. Yeah, that was a substantial investment in value-based care that just didn't pan out.
Right.
Cigna is writing it off completely
Wow.
and won't be seeing any dividends from it going forward.
Cordani blamed it on bad timing, pointed to market disruptions and cash flow problems with Village MD's other investors.
Which begs the question, what does this mean for Cigna's approach to value-based care in the future?
Right.
Will they keep trying to partner up, or are they going to be much more cautious?
Something to keep an eye on, for sure, especially since value-based care is becoming more and more popular across healthcare.
Agreed. It'll be telling to see how they adjust their strategy from here.
Speaking of adjustments, let's talk about Cigna's approach to using its capital.
Okay.
It's no secret they love stock buybacks.
Yeah.
They've spent a staggering $24 billion on them over the last 4 years.
And they've made it clear that buybacks are still a top priority.
Right.
They haven't given specific numbers for 2025, but the writing's on the wall.
Yeah, they're really putting their money where their mouth is, which could be interpreted a couple of ways. Either they're super confident about their future, or they just don't see any better places to invest.
Or maybe a bit of both.
Yeah.
But it's definitely a bold move that will impact their future one way or another, and it's got people speculating about potential acquisitions down the line.
Don't forget their 2025 projections.
Yes.
They're anticipating EPS growth of at least 10%, which is actually on the low end of their historical performance.
They've highlighted some things working in their favor.
Okay.
Like the ongoing growth of biosimilars,
Uh-huh.
expanding their client base, and the cash they'll get from that Medicare Advantage sale.
But there are headwinds, too.
Right.
Losing the Village MD dividend.
Yeah.
Extra costs from shutting down the Medicare Advantage business and all those ongoing investments they're making.
So they're projecting growth,
Uh-huh.
but it's not all smooth sailing.
Got it.
They've got some serious challenges ahead of them.
One thing that stood out to me was how much Cigna pushed back against the bad reputation of pharmacy benefit managers, or PBMs.
Yeah, interesting.
Cordani even brought up a study by University of Chicago economics professor that contradicted the FTC's report on PBMs.
Interesting that they're being so proactive about that. PBMs have been under a lot of scrutiny lately, and Cigna's clearly trying to defend their role in the market.
They want to prove that PBMs bring value to the table, which makes sense given how much legislation could impact their business.
Right.
There's nothing concrete in the works right now, but they're definitely keeping a close eye on things.
Absolutely.
Yeah.
They also emphasize the growing demand for behavioral health services. Utilization has practically doubled in the last 5 years,
Wow.
which is a trend that's not going away anytime soon.
It's good that they're acknowledging how important this is. They talked about how they're increasing access to these services and improving them through both Evernorth and Cigna Healthcare.
Definitely aligns with the bigger trend of healthcare shifting to a more holistic approach,
Right.
looking beyond just physical health.
Right.
They also spent some time on the impact of technology,
Okay.
particularly virtual services.
They mentioned the huge rise of telehealth.
Yeah.
About 25% of patients access care virtually last year.
Wow.
And they highlighted the progress they've made with their telehealth platform, MDLIV.
It's clear that technology is going to be a major player in healthcare going forward, and Cigna wants to be at the forefront of that evolution.
They're investing in innovations to make healthcare more convenient and easier to access, all while adapting to the changing needs and expectations of patients.
It'll be interesting to see which technologies they choose to focus on and how those investments actually benefit their customers and clients in the real world. And that brings us to Cigna's overall financial performance this quarter.
Okay.
It was a strong showing,
Yeah.
especially for their Evernorth segment.
Right.
They really blew past expectations and proved how powerful their specialty and care services business is.
You're right. $63.7 billion in revenue is nothing to scoff at.
Right.
And that 7.51 adjusted EPS shows they're delivering real value.
Exactly.
But as we've been saying, there's more to the story than just those top-line numbers.
Yeah.
We have to understand what's driving that performance and what it means for the long term.
Exactly. For example, their specialty and care services revenue jumped a whopping 23% to hit $23.8 billion this quarter.
Wow.
That's a massive increase and shows how well they're capitalizing on the specialty drug boom.
What's fueling that growth?
Wow.
Is it just the rising demand for specialty medications, or are there other factors at play?
It's a combination of things. You've got the increasing demand, of course, but also the introduction of new therapies and Cigna's successful push to get people using biosimilars.
Speaking of biosimilars, it seems like their strategy of making these more affordable options available is really paying off.
Without a doubt.
Yeah.
The fact that 1/3 of eligible Accredo patients switched to a biosimilar for Humira in Q3 proves that their plan is working.
And they're only going to double down on that strategy, especially with that $0 out-of-pocket option for a Stelara biosimilar coming in 2025.
Right.
It's a win-win for everyone, right?
Yeah.
Patients get lower costs, and Cigna manages their own expenses related to those pricey specialty drugs.
Precisely. It's a smart move on their part.
Yeah.
But let's not forget about their pharmacy benefit services business
Okay.
that also saw strong revenue growth this quarter, driven by landing new clients and expanding their relationships with existing ones.
That shows they can attract and keep clients even in a market that's getting more competitive all the time.
Right.
They're using their size and influence to get better deals with drug manufacturers and pharmacies.
They're not just relying on size, though.
Yeah.
They're constantly innovating and coming up with new solutions that their clients need, like their InCircle X program for GLP-1 medications.
You know, for those who aren't familiar,
You're right.
GLP-1 drugs are a relatively new class of medications used to treat type 2 diabetes. They've become incredibly popular because they can also help people lose weight.
Right. And Cigna's Encircle X program has seen incredible growth, reaching almost 8 million enrolled lives in just a few short months.
Wow.
Yeah.
It's clear that clients need help managing the rising costs of these medications, and Cigna is stepping up to provide a valuable solution.
Now, shifting gears to Cigna Healthcare.
Okay.
The picture's a little different. They posted solid numbers with $13.3 billion in revenue and $1.2 billion in pre-tax adjusted earnings, but they also got hit with higher specialty drug costs.
Which makes sense, right? They're the ones footing the bill for those expensive medications. It's the flip side of the coin to Evernorth's growth in specialty drugs.
Exactly. And because of those higher costs, they've had to adjust their medical care ratio outlook for the year. They're now expecting it to be at the high end of their previously stated range.
That just underlines how important their biosimilar strategy is. It's helping them keep those rising costs in check.
It's a crucial part of their plan to manage expenses and stay profitable in their insurance business.
Okay, let's zoom out a bit and look at Cigna's stock performance.
Okay.
Their share price has been a bit up and down this year, but overall, it's stayed relatively stable.
Right now, they're trading at a price-to-earnings ratio of 24.76, which is pretty much on par with their peers in the healthcare sector.
And their dividend yield of 1.78% gives investors some decent income.
But what's really interesting is their aggressive approach to stock buybacks.
Yeah.
Remember that $24 billion they've spent buying back their own shares?
Right.
That's a big signal that they believe in their future.
Definitely, it's a move that's grabbed the attention of analysts and investors alike.
Right.
It raises questions about how they're allocating their capital and whether they might be planning some big acquisitions down the line.
Especially after they announced they'll use the cash from selling their Medicare Advantage business for even more buybacks.
Yeah.
It's definitely a development worth watching closely because it could have big implications for their future growth and shareholder value.
Agreed. We'll be keeping a close eye on that. But let's not forget that Cigna isn't operating in a vacuum.
Right.
They're facing some serious challenges in this ever-changing healthcare landscape, with rising costs, new regulations, and increasing competition.
One of their biggest hurdles is managing those rising medical costs, especially for specialty drugs.
Right.
As we've been discussing, biosimilars are a key part of their strategy, but it's an ongoing battle.
And it's not just specialty drugs. They're also seeing costs go up in other areas like inpatient care and mental health services.
Right. And those rising costs squeeze their margins and make it tougher to keep premiums affordable for their customers.
The loss of that Village MD dividend is another challenge they'll have to deal with.
Yeah.
That's going to put a dent in their earnings in 2025.
That failed investment was a definite setback for their value-based care strategy.
Right.
It remains to be seen how they'll adjust their approach going forward.
And then there's the ongoing scrutiny of the pharmacy benefit management industry.
Yeah.
The FTC's report and the possibility of new legislation are a real threat to their business model.
They're fighting back against the negative narrative and highlighting the value they believe PBMs bring to the table, but the regulatory future is still uncertain.
Plus, they have to deal with the same economic pressures that are affecting businesses everywhere right now, like inflation and supply chain disruptions.
Those factors can impact their costs and make it harder to maintain profitability.
It sounds like they've got their work cut out for them. But despite these challenges, Cigna has a lot going for it. They've got a diversified business model with a strong insurance arm and that rapidly growing pharmacy and specialty services division.
That diversification helps them spread out their risk and gives them multiple avenues for growth.
They've also got a massive and loyal customer base, which provides a steady stream of revenue.
And they've proven time and again that they can innovate and come up with new solutions to meet the evolving needs of their clients and customers.
They're also investing heavily in technology, which is essential for staying ahead of the curve in this rapidly changing healthcare landscape.
Those investments are focused on things like improving efficiency, making the customer experience better, and enabling them to deliver more personalized care.
And let's not forget their strong management team. They've got a deep understanding of the healthcare industry.
That kind of experienced leadership is crucial for navigating the complexities of the market and making smart decisions that set the company up for long-term success.
So despite the challenges, it sounds like Cigna has a solid foundation to build on.
Right.
What about their opportunities for growth? Well, where do you see the most potential for them?
One of their biggest opportunities is continuing to expand their specialty drug business. The demand for specialty medications is only going to increase in the coming years, and Cigna is in a prime position to capitalize on that.
Their Accredo specialty pharmacy is already a market leader, And they're always expanding their capabilities and what they offer.
Their focus on biosimilars is also a major growth driver as they offer a more affordable alternative to those expensive brand name drugs.
And they have a lot of room to grow their pharmacy benefit services business,
Yeah.
especially by winning new clients and expanding relationships with existing ones.
Their size and negotiating power give them a real edge in that market, and they're constantly innovating to create solutions that meet their clients' needs.
Another area where they can grow is in government-sponsored programs like Medicare and Medicaid.
Even though they're selling their Medicare Advantage business, they're still serving Medicare patients through Evernorth,
Right.
and they see that as a big market opportunity.
And they're expanding what they offer in the Medicaid market, which is growing steadily.
They're also exploring international markets where healthcare spending is on the rise.
Wow.
That international expansion could be a new avenue for growth and diversification.
It sounds like they're looking beyond U.S. borders to find new opportunities.
Exactly. And they're investing in new technologies and capabilities that will allow them to deliver care that's more personalized and value-based.
What kind of technologies are we talking about here?
Things like telehealth,
Okay.
data analytics, and artificial intelligence.
Those are some cutting-edge areas.
They are, and these investments are essential for Cigna to stay ahead of the curve and meet the changing needs of their customers and clients.
So it seems like Cigna is facing a mix of challenges and opportunities, but they have the strengths and resources to navigate this dynamic environment and continue to be successful.
Their strategic decisions in the coming months and years will be critical for determining their long-term growth trajectory.
That makes sense. Now, let's take a step back and think about the bigger picture.
Okay.
What does Cigna's performance and strategy tell us about the state of the healthcare industry as a whole?
It shows us an industry in transition, grappling with rising costs, rapid technological advancements, and ever-changing regulations.
The specialty drug boom is a major force shaping the market, and Cigna's focus on biosimilars highlights the growing need for more affordable options.
The shift towards value-based care is also gaining momentum, although Cigna's setback with VillageMD shows that this transition isn't always smooth sailing.
And the increased scrutiny on PBMs underscores the complexities of the pharmaceutical supply chain and the need for greater transparency.
Cigna's performance also highlights the importance of diversification and innovation in the healthcare industry. Companies that can adapt to changing market conditions and develop new solutions will be the ones that thrive in the long run.
Their investments in technology and their expansion into new markets demonstrate their commitment to staying ahead of the curve.
And their focus on government-sponsored programs also speaks to the growing role of government in the healthcare sector.
Overall, it seems like Cigna's performance provides valuable insights into the forces shaping the healthcare industry and the strategies companies are using to navigate this complex landscape.
It's a story that will continue to unfold, and it'll be fascinating to see how it all plays out.
It's a complex landscape, that's for sure, but that's what makes it so interesting to follow, right?
Absolutely. There's always something new happening, some new trend to analyze.
Well, we've covered a lot of ground today. Before we wrap up, let's distill this down to the key takeaways for our listeners.
Okay.
What are the most important things they should remember about Cigna's Q3 performance and what it means for their investments?
First off, Cigna had a solid quarter financially. They exceeded expectations and showed how resilient their business model is, even in a tough environment.
Their Evernorth segment is a powerhouse. It's really driving their growth thanks to the demand for specialty drugs and their strategic use of biosimilars.
And they're not just sitting back and riding that wave. They're actively making those specialty drugs more affordable, which is good for patients and their bottom line.
They're also making some bold moves, like selling their Medicare Advantage business and doubling down on stock buybacks. It's a clear signal of how they see their future playing out.
But it's not all sunshine and roses.
Right.
They've got challenges to overcome, like those rising medical costs, the VillageMD write-off, and the uncertainty surrounding pharmacy benefit managers.
Right, but they also have a lot of strengths, a diversified business, a loyal customer base, a history of innovation, a willingness to invest in new technology, and a strong management team.
Exactly. Those strengths give them a solid foundation to build on as they navigate this rapidly changing industry.
So 2025 is shaping up to be a pivotal year for Cigna. There are a lot of factors at play, and their decisions in the coming months will have a major impact on their future success.
For investors, this means paying close attention to how Cigna handles these challenges and capitalizes on the opportunities in front of them.
We've talked a lot about their strategy today, but I want to leave our listeners with one final question to ponder. Is Cigna's focus on stock buybacks a sign of confidence Or is it a missed opportunity to invest in other areas that could drive even more growth? What do you think?
That's a great question to consider. It's a complex issue with no easy answers,
Right.
but it's those tough questions that make investing so fascinating, right?
Absolutely. Well, on that note, we'll wrap up this deep dive. Thanks for joining us today and sharing your insights.
Always a pleasure.
And to our listeners, thanks for diving deep with us. We hope you found this analysis valuable. We'll see you on the next deep dive. Until then, stay curious and keep learning.